Hi, this is Kimberly Elizabeth, and I would like to welcome you back to Bookkeeping Journey. Today's video, I'm going to be talking to you about debits and credits. I'm going to make it as simple and as easy as possible as I can, so that when you are doing your own bookkeeping, that you completely understand what are debits and what are credits. So first, I'll start off on why they're used. It's the reason why we have debits and credits is to make sure that your books are balanced. So to make sure that every transaction that comes in, it is debited and is also credited, so that at the end of the month that you have a balanced account. So at the end of the month, this goes into a trial balance and it makes sure that everything that was debited was credited. So therefore you can have a complete understanding of how money is flowing in and out of the business, right? That is actually a good help, especially when it comes to your balance sheet and your profit and loss statement, for sure. So what are debits? Debits are assets. Debits are also expenses. There are other lists of debits, but I can list a whole set of things that are debits, but the thing is that I'm just making this video for you, the business owner, to just have a brief concept and a brief understanding of how this works in your business when you see it. So we mostly deal with expenses and also income. So you have expenses in your business, you have income that comes into your business, that's money coming in. And when you see an expense, you know that that's a debit. When you see income, you know that that's a credit. When also you see equity, or what we call here capital, that is also a credit. And there are some books that only have credit transactions, and then there are some of them that only have debit transactions. And the quick example that I can give you is sales is always a credit and purchases is always a debit. That is one thing that I learned in my accounting certificate, and it always stuck with me. I remember sales is income and purchases is an expense. So hopefully you have a better understanding of what are debits and credits when you see them in your journal entries. You know, when you go into that balance sheet and you click on a transaction and you see that there's a debit and there's a credit, you understand why, because it all has to balance. When you go into your general ledger, you know that all these have to balance. That's as easy and as simple as I can make it, and I really hope you enjoyed the video. Before I go, I would like to shout out whatever, because she is the reason I'm making these videos. And I'm not making these videos to go into all the extra accounting details. I'm just making them so that the business owner that just wants to have a little understanding, a bit more understanding of the bookkeeping and the concepts, that you can watch a simple video, get a basic concept, and be able to, move from there. Even when your bookkeeper is talking to you, you have a better understanding. And for those bookkeepers or coming bookkeepers that that accounting could seem a little bit complicated, I want to make them as simple and as understanding for you, because there's so many technical things online, and I'm trying my best not to make anything technical, but as simple and as easy as I understand them when I did all my studying. Well, I continue to do my studying. So thank you so much for watching. Bye.